Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Hey, Octavius, Dan Trader. Well, when I come in here, this is like the first time that I've seen the charts. I do a lot of reading in the morning, but this is the first time that I see the charts. And I'm glancing over at my 10-year treasury chart, and I'm already like a little unhappy about how disorganized it looks. So let's come in and take a look here at the overall overnight action. So first of all, I just want to point that today we are in like a third inside day here in the treasuries, which can be very difficult trading. And that's on top of a market that has actually been moving around quite a bit overnight. So you can see there was a little bit of an up move that has since kind of subsided. They haven't really picked a strong direction in these first 7 minutes, though. S&P 500 did not really extend its gains too much on Monday. They actually lost a little bit and then recovered it into the close, which is actually a really common these days that, you know, when you get a bear market, they claw most of it back. Oil pushing down to new lows here below 80. Very curious. Not 100% sure what's driving that. And silver and gold are also plunging here. Now that is very interesting. What about copper? Copper is falling as well. So are we seeing another surge in the dollar perhaps? Well, there's Bitcoin. Bitcoin's not really doing it. I really hate it when it doesn't show me the... Sometimes it doesn't size the window correctly. Anyways, I have to do that to be able to switch to tab. Okay, so we are seeing some dollar strength. Not that it's like super strong though, but we are back to 105.5. So is that just dollar strength pushing all of these things down? I don't know. I don't think that can completely explain why gold and silver are getting hammered so hard. Can it? So that's where we're at. Let's coming back over here. The schedule. So we have Kashkari speaking at the bottom of the hour, and then at the top of the hour, we're going to get Fed's Goolsby. We also got later in the day Barr, Schmidt, Waller, all speaking. We also get the Red Book today, which is kind of like a... Well, the Red Book is a really important release, but like we already know all of the information in it, so it doesn't really affect the market. But oh, you're watching on mobile? Well, I feel so honored that you enjoy watching and listening to me so much that you even watch when you're on the go, huh? Okay, so we got Fed speakers. That's kind of, well, we're gonna get one of them here in 10 seconds. So I want to come over here and just do a little bit of digging, because it seems to me like that move in gold is a little bit more than you'd expect. Metals feature marked pressure in spot gold, with the stronger US dollar offsetting any potential haven demand that may typically have been expected from the current tone, a tone which is weighing on base metal peers. It's kind of odd, but dollar strength seems to be the big kind of narrative this morning. I really wonder what's driving. Well, the Japanese yen not looking so hot. I wonder, so we got a lot of selling in treasuries yesterday. And one of the things has been like, are we seeing the Japanese sell more because they're concerned about their currency? Well, could be. Because, they're quite low today. Or we've seen quite a bit of downside action today. So I need to keep an eye on Twitter here. Who's already breaking yesterday's lows? Really? Well, I do feel though I should be taking some trades today. And it seems to me that the direction is higher rates. I don't think that I got a whole lot of support for that in the action and the volume that we've had through the session so far. Nor do I have a super clear something super clear to let me know that they should be selling today. But I think that my speculation is that they will sell just as they did yesterday, or that the Japanese yen will continue to plunge here. But I think I should be careful, because if I do get it, like maybe I can get 461 to 462, maybe 463, but I don't think I want to press that one because I'd be concerned about a reversal here. I'm a little bit more concerned about potential reversals than I normally would be. Let's see. What's this picture that Luke posted? Oh, the Virgin Algo trader versus the Chad Pitt trader. I think it's easier to become a successful trader being a discretionary trader than it would be algorithmically trading. But one of the interesting things about the algo trading is that you can backtest and things like that, and you don't have to go until you really have a system that has shown some efficacy. So whereas the pit trader, discretionary trader, you kind of have to go through it. You go through it. So I feel like that an algo trader is, it's algo trader is harder, but you're more consistent. Once you get a system, it's less risk and things like that. But it's harder to find an edge. Well, the last few ticks made me think maybe I'm not going to get it, but now they're pushing through. So right now I'm kind of seeing a little bit of market maker shenanigans. And look at that. So apparently 461 is not the spot. You gonna touch 4-6? Yeah, you know, I'm not seeing a ton of volume in this. Am I seeing the Japanese yen move there? Oh, Japanese yen is moving up a little bit. It's a little bit iffy. I don't know if this move here contradicts my overall thesis or if it's just noise. So very much in high informational risk at the moment. Advisor to head of Ukrainian military killed with hand grenade disguised as a birthday present comes as a military head openly criticizing Zelensky's handling of the war. The present was vodka glasses shaped like grenades, but one of the grenades was real. Whoa, what the hell? And you think that he was off because Zelensky didn't like him? I don't know. Why wouldn't he just fire him like they fired so many other people? I don't know. One has to wonder with Zelensky, because even though things don't look very good for them right now, he's still pushing really hard, right? And so is it that he truly believes that they just need a little bit more support and they're gonna win, or is it more of like an ego check sort of a thing, or is it just that he's making money from that, or other people are making money from that, and so he's incentivized to continue pushing for Western money, you know? Grenades made by Acme. Yeah, that is a wild. You have a source on that? Should link that one. Well, I'm not necessarily seeing a liquidity hole here, but we're definitely going back and forth across this like 27, half 27 area a lot. New York Times, really? You have a New York Times subscription? No, I want to be able to read this story. New York Times is good enough for me. Oh, okay. Because that kind of sounds like the sort of thing that I would see posted on Reddit with people not, really thoroughly looking it through. So I got to make sure that it's at least coming from a reputable source. it drives me nuts because I see a lot of stuff like that posted on conservative websites without a whole lot of critical thinking. It really irks me when, you know, we accuse the left of not being critical thinkers and kind of being NPCs and not following science. But then as Republicans, I constantly see people share information, conspiracy theories, etc., with no real backing, and they don't think twice about it, you know? Like there was this post, what was the one I saw yesterday on r/conservative? It was like, this guy said that he's a contractor for intelligence agencies and that in the next 4 months there's going to be like significant terrorist attacks. Like they already know that it's already been decided that it's going to happen or something. I'm like, this is r/conservative, not r/conspiracy. Well, you know, it wouldn't even necessarily. So if you had given me like, what would be an example of like a very not reputable conservative news site? What's Chernovich's one? They post tons of rumors and unverified information. It's not the Daily Caller. It's like the something report or something. Well, let's... Okay, so a better example. The big news item yesterday was that the transgender shooter's notebook essentially was leaked on the internet by Crowder, right? So immediately people were like, this is not legit. Of course, I think it was pretty quickly, it was shown that it was legit because all of the people in charge were like really upset about it. So pretty sure that it was for real. Okay. But how would I go about verifying it? Even if it's from a source that I don't think is very reputable? Well, how is he verifying it? He's saying he has sources, right? The source leaked it to him. So I kind of have to trust him that he is not just taking something that some random person messaged him on the internet. I don't think that he would do that. So when he posted that image, no doubt in my mind that it was legitimate right away, even though there's a lot of reasons for me to doubt the source, right? It has, you have to make decisions about whether information is real or not based on the source, but by how the source is verifying the information. What are they posting about it, right? I think another good example is the accusation that the United States were the ones that blew up the Nord Stream 2 pipeline. Okay. I think it's 100% true. I think it's 100% true. And the reason I think that is because you had a journalist with multiple sources from within the military that told him how it worked and gave him very specific details. And they give those kind of very specific details. These are kind of like, they don't outright say, I'm including this detail because it's an important way to verify that it's true. But you can kind of see those footprints in there that they leave for the people that would try and say that it's not true to be proven wrong at some point. Right? I think the first time that you said that was before that guy did that story. Right? But when the guy did that story, I 100% believe him. Yeah, I bet I can go back and find the stream because I remember talking about it. It came out in the evening, and I remember talking about it the day afterwards and saying, well, this seems pretty wild, but the story appears legitimate to me. I very much remember that. But I also remember people claiming that it was the United States long before he did that story. So there something else that's going on. Oh, I tell you what, I find this whole thing incredibly odd. Let me say odd. Is that conservative outlets are outright pushing like Russian propaganda. It happens all the time. So one of the things I've noticed with Zero Hedge, have you noticed that Zero Hedge has actually been kind of pushing both pro-Palestinian propaganda and like conservative red meat about Israel? It's kind of a really interesting thing. So I don't know why they do it. It's like they're trying to present both sides of the story. I don't know like where are these sources that they get that are kind of like the pro-Palestinian stuff. But like if you go and you read on Zero Hedge about what's happening in the Gaza Strip right now, there are some places, by the way, I keep seeing this thing on TikTok where they give like a really deep rundown on what the military operations that day were, which is really, really interesting. The whole way that they're going about it, how they split the strip up first and coming at it from it's a whole thing, right? And there's like some real info that if you want to be informed about what's going on, that would be like the information that I think you would want to get. But like Zero Hedge has kind of been pushing the information that would be most likely to get Americans upset about there being any kind of conflict going on at all. So for instance, the refugee camp thing Hamas had weapons stored underneath of an area that is a refugee camp. The Israelis have already told everybody to get out of the North Strip, so there shouldn't be any civilians in the Northern Strip. They've had plenty of time to try and get out. And they did not attack a refugee camp. But what they did do was they attacked Hamas headquarters that was very close to that, and secondary explosions through the tunnels blew up some of the ordnance that they were storing under the camp and caused an explosion in the camp. And that's what happened, right? So a couple of little details there that I think are important, because Israel is just not going in and indiscriminately attacking, and, you know, they're doing everything that they can to minimize the loss of civilian life. But Zero Hedge never posted that. They went along with the pro-Palestinian thing that, oh, they blew up a refugee camp, and then when more information was offered, they didn't correct it. It's the same thing with the hospital. Zero Hedge didn't put any of the corrective information about the hospital out there. And when you look at what Russians are pushing out like pro-Palestinian. So why do they do that? A lot of conservative, I haven't seen any conservative influencers go that way, but there is maybe a little bit of a schism where the neoconservative establishment wing of the Republican Party is pretty much unequivocal support for Israel no matter what, and whereas the anti-interventionists, would clearly distrust support of Israel simply for the point that, that's foreign aid and conflict and so forth that they don't want. Okay, so what happened with the hospital thing was there was an explosion at a hospital in Gaza, and what had actually happened was terrorists in Gaza were firing off missiles, and one of the missiles kind of got screwed up and landed in Gaza, and it landed in the parking lot of this hospital, and basically it just blew up the parking lot. So when the thing came out, Hamas was immediately like 2,000 people died and all. That was probably bullshit. In fact, there's no evidence that anybody died. Maybe there was a few people in the parking lot, but you know, it would be a dozen people at most, because how many people are in the parking lot of a hospital in the middle of the night, right? So while on the media, everybody was saying Israel attacked a hospital, it was the terrorists. And we know this for fact because we have video from like 4 different angles, including like geotagged locations and all of this stuff, proving that it was, and it wasn't Hamas. There's another organization within Gaza that's shooting missiles, but you know, like associated. But it was the terrorists that were responsible for that explosion, not Israel. It was actually a very ironic, because here's the thing, like Hamas's headquarters are basically under the largest hospital in Gaza. Israel has posted, you know, infographic images showing what the tunnels underneath of the hospital look like and all of that. So Hezbollah and their media allies have always been gearing up for when Israel inevitably strikes that hospital to trigger all of this outrage about the hospital, right? And so when they saw the words that a hospital was blown up, they went full hog on it, and then it was proven that it actually was the terrorists that made that explosion. You going for 108? I'm surprised that you're saying you're long now. I think that extension above 29, I'm not going to say that puts me off of going for a short today, but it certainly tells me that if it's going to happen today, it's not happening right now. It's pretty not really my market, it seems. That's why reputation is so important with reporting eventually BS gets discovered. Well, but I mean, that's kind of the thing, is that in the modern journalism, I'm not really sure that there is anybody that I 100% trust to be giving me the both accurate information and the complete picture all the time. I always have to read the story and make sure that they've done all of their work, because honestly, journalism just is not what it used to be, man. What a fascinating world. I know, but journalism is just not what it used to be, right? Like most of journalism today is reading what other people posted on Twitter and then writing stories about it. Dead serious, it is. The like true investigative journalists or like war zone reporters are just not a thing like they were 20 years ago. It's just not. The news organizations have kind of been savaged. Like the internet it's kind of interesting, because the internet has been a huge threat to like your news networks and stuff like that. But And so they've gone after the internet news and they've kind of supported narratives that weren't true and all of that sort of stuff. But at the same time, it's also hurt their revenue. And so they're not able to put the money into like real quality reporting like they used to. And then on top of that, there is a very much so ideological bias within the news media, and the news media for some reason seems to be in complete denial about it. Like every time that they do surveys and things like that, it shows very clearly that most of the media are left-wing minded, and that it affects their reporting. and it affects their beliefs and what they say and stuff. But the news media still denies it. Okay, yes, the market is, sorry, it's a new name. Welcome to the stream. The market opened 1 hour later than it usual time. Is it normal and occurs frequently? So on Sunday in the United States, we had daylight savings time and we moved our clocks 1 hour back. And so that's why to you, it seems that the market is starting 1 hour later than usual. I kind of forgot about that because I worked out pretty hard yesterday, and so I slept like a rock. But I didn't feel like I was. I felt like I was waking up early. I wasn't getting the last little bit of restful sleep, and I'm now realizing that a part of that might have just been daylight savings time. Okay, now so they just extended pretty aggressively there between 30 and 31. It seems likely they'll get 108. So good call for those of you guys that were in that. Interestingly enough, there was, I didn't see it on the DOM, but I can see it in the cumulative delta. There's seemingly an area where they actually did sell quite a bit and it held, and that's when they then got pushed up, was like once the iceberg revealed itself. But there's an iceberg at 31. There's some volume on both sides of that. So I'm not sure that I could say. So there probably is a large meta order going long, but there's probably one going short too, or at least there's some evidence of one going short too. So we actually have two forces kind of meeting together here, and that kind of changes the picture for us, right? That is kind of the, okay, we probably still want to catch more range trades. Figure out where the two guys are trying to execute from and discover those edges and trade it range bound instead of a trend. And, you know, again, on the media bias, you know, a really, really great example is this whole shooter thing where there was information that I think is kind of relevant to the public discourse about what that shooter's motives were, and they hit it. They hit it and said, oh, the shooter didn't appear to have any motivation. BS. That's total BS. Total BS. They were lying to us and they hid the information. And I see this happening more and more. Because what my lifeblood, that, you know, a large source of where our edge comes from is from understanding the news. So I watch it very closely, and yeah, I see lots of stuff that I'm very upset about. It's interesting to me to see how to watch Twitter become like the bastion of free speech again. It's really quite wild, because I thought, oh yeah, like people are leaving Twitter. I'm not so sure that this is actually working out, but the people that do feel like that their free speech is being compromised, or that, you know, their content gets throttled or blocked, especially, for instance, on YouTube, people that make content about guns, because YouTube does allow content about guns, but then like a lot of their content gets taken down for whatever reason. And so now these guys are moving over to building up their audience on Twitter. So it actually does. How long does this daylight savings last? Until April, May. So the real question is, when does daylight savings start for you? Because I believe most places in the world have daylight savings time. It's usually like the US has daylight savings and the UK markets have daylight savings. So there's a few weeks where the United States and the UK are offset, but then eventually they come back into sync. So I don't know where you live, but if you don't have daylight savings time in your area, then it will last until the spring. Okay, so the one I'm referencing is, I don't know the name or what people are calling it, but basically it was a transgender boy that attacked a upper middle class Christian school that they attended when they were a kid. So this person was like 24, 28, something like that. And they went and attacked this school. And when almost immediately after the shooting, we found out that there was a manifesto of some sort. And they said that they were going to release it. And then the police basically reneged on that and didn't release it. And so everybody's like, release the manifesto, etc. And then yesterday, Crowder on Twitter posted the first 3 pages of it. Oh, by the way, in an hour, he's supposed to be giving us something else. He was talking up something else that going live on Rumble. So I don't know if it's going to be related to that or if it's going to be something completely different. So that's what I'm talking about. But you know what? I would argue the Las Vegas shooter. I don't think that they were truthful with us about what the Las Vegas shooter's motives were. I think that there's information about the Las Vegas shooter that they're probably not telling us. I reject all of these other conspiracy theories that he was like an FBI plant, that the FBI put him up to doing it and all that sort of stuff. Or that there was multiple shooters, but it does seem that they're not actually being truthful with us about what his motives were. Rumble has live videos of the Hamas invasion. If people saw these, I don't think there would be as many protests. Dude, this I know it seems really silly to say something like this because I'm not there, obviously. Okay, but you need to realize that the lower part of your brain, the medulla, where like emotional memories are made and stored, this is a system that kind of like bypasses everything else, right? If you touch a stove and your body says that's hot and pulls your hand away, automatically that like goes to the medulla and back. It's super fast and it's almost automatic. It's like a reflex, right? So the medulla cannot differentiate between something actually happening and you just thinking about it in your head. Okay, so if you're thinking about something, you can implant emotional memories in your medulla. Okay. So the most common thing that people do with this is with relationships. You get people that are kind of anxious lovers. And so they're sitting and thinking the whole time about their lover leaving them and all of the anxiety with that. And so they feel that anxiety and they will actually kind of mistake the feeling of anxiety because it's kind of like you get butterflies in your stomach and things like that. And so they mistake that for love. Right. And then they'll constantly think about that all the time. And it will create very negative relationship dynamics because then you become like the stage 5 clinger kind of lover. Right. And then that's very unattractive to a lot of people. So there's an example of where thinking about or dwelling on something, it can be very negative for you because your brain essentially records these emotional memories. Right. Well, that is totally happening to me with this Israel thing. Some of these stories that come out of this, I think the one that disturbs me the most is that there's a video where Hamas comes in and they throw a toddler in the oven and then turn the oven on. And the toddler is screaming while they butcher the parents. And yeah, it traumatized. I feel traumatized by it. Like I can feel the emotions. Like it immediately triggers it in me. I think about it way too much, it's definitely had like a negative impact on me. And that's not even from watching the videos. That's just from reading about what happened. Oh, man. And it makes me so angry. So angry. Where did you see that? There's descriptions. Israel has been like doing screenings with journalists. I think Gal Gadot was like setting up people in Hollywood to watch these. Basically, the terrorists posted this stuff on Twitter, and the Israeli government, saved it all, essentially. But there's news stories that talk about it. You can read all this stuff. Geez. But man, it's just you, and you start thinking about your own kids, and if that happened to you, we're traumatized by it. Just like millennials are all traumatized by 9/11, even if they weren't there, even if they didn't lose anybody from it, right? It's a thing. Think positive affirmations. Well, what I'm thinking right now is I missed my chance to get 4.6, and we're at 4.61 now, and that little trend turned down awfully quickly, didn't it? So I'm going to kind of err on the side of an inefficient execution, because I think that there's a pretty good chance that they continue to sell. Like, it seems like this was kind of like maybe market maker shenanigans going on up here. Maybe two guys kind of meeting in the middle, but then the seller just absolutely overwhelming them, right? Because we shifted down 10,000 contracts very quickly. So the sellers were there, and they were just kind of waiting for their spot. In other words, the sell that I was hoping might be out there, it looks like it is there. By the way, the Japanese yen fell to new lows on that move as well. So if this goes for me, and I obviously did not get a very good execution there, but if this runs for me, I still need to be cognizant and on the lookout for reversals. And also, they did not quite tag 108 even, did they? Which is pretty... Whew. I'm actually a little bit surprised that you guys have not read those stories or seen that. That tells me that one of the things that's the most difficult, and I think particularly for me, but I think it's a difficult thing to do in general, is to know what you know compared to other people, right? And so I'll make the assumption that everybody has read these stories and watched these videos, and I'm now realizing that probably most people have not. But my heart is still kind of feeling like a little anxiety going on here, thinking about those videos. Ugh, it's so awful, guys. What happened, what those terrorists did were some of the greatest atrocities you could commit. I'm not going to say like in the history of the world, because this has happened many, many times in the past, but I'd say it's about the worst kind of atrocity. It's like going and butchering people and then calling their family members out and proudly proclaiming what you just did. It's so sick. Reminds me of another thing that happened was a long time ago. There was these Israelis that they were visiting somebody in the West Bank, and they went the wrong way and ended up in Ramallah, which is like one of the largest townships there in the West Bank. And the Palestinians immediately recognized, based on the license plate, that that they were Israelis, and so they killed the people in the car and pulled their organs out and displayed their organs, and there was one guy that held his hands out the window, showing the blood on his hands, proud of what he had just done. And then it became a trend in Palestine to do that, and even little kids were doing that. It's just absolutely disgusting, right? Like, I feel kind of nervous talking about it because it's kind of, even just talking about it is kind of on the verge of, like, YouTube doesn't want to talk about that kind of violence, But that stuff is happening, and I'm a little disturbed that not everybody is hearing about it. Okay, they're about to go to a new low in the 10-year. They just like 2 ticks real quick. And it's the Japanese yen again. Okay. So even though there was a flow selling in the 10-year on the way down to this and everything, I also have some evidence that the Japanese yen is a key driver here. And that's important to note just because there could be some places where, if the volatility gets too high, that the Japanese will come in and intervene. Says a lot about the human race. No wonder the aliens just observed. Well, yeah. So this is like an uncomfortable thing to talk about, but it's something that people need to understand, because I think when we teach about the Holocaust and other such atrocities, that this kind of gets lost. It's kind of like we say, this can happen and we need to prevent it. But I think that the thing you need to understand is that it's actually a part of human nature, that part of the reason why we're here and most of our blood is Denisovanan blood instead of Neanderthal blood is because humans will commit genocide. So how do we know this? So there was this interesting study where these people were studying a monkey troop, and they monkey troop started to get into a competition with another monkey troop. And eventually that monkey troop hunted down and killed every member of that other monkey troop. And there was like one monkey that had been hiding around on its own for years and years. And eventually they found that monkey. And even after that conflict basically being dead for several years, the monkeys still killed him. So these monkeys literally committed genocide, right? It's like, it's this part of human nature, this collective thing where when you're in competition with another group, you have to essentially destroy the whole other group or they come back and it's a threat to you. And so humans have this tendency or there's this pathway that can kind of lead them down into genocide. It's a real thing. We're ranting about genocide. They trade 26 there. So the 30-year isn't coming down as fast. We're getting a little bit of flattening here. And that's even though I'm getting some really good action because I was like at 28 when I got into this. It's a part of people. I don't know. I wonder sometimes what is just like natural for humans and what is like laws within our current systems. Like one of the things that bothers me right now, and I was commenting about this morning on Reddit, is it seems like political leadership just isn't very good right now. And one could easily look at, okay, we got a senile old man versus Donald Trump this time around, and it's going to be a rematch of last time around, and we couldn't get better candidates. But you know what? Even if Donald Trump wasn't running right now, I don't think that the Republican candidate would be very good. Probably good enough to beat Joe Biden. But I think that as we've watched their campaigns, they're not really very good. So what's going on? Well, it seems to me that our best and brightest are actively avoiding getting into politics because it's such a mess. A good person gets into politics and then, you know, they get all of this mud slung at them, then nobody wants to deal with that. Well, that was a little bit of an aggressive pullback on not a whole lot. There was a little bit of volume on that. So... I'm gonna try and give it the benefit of the doubt, but I do need to keep this on a short leash because of my expected flows, right? Okay, so they let me out at -5. Okay, so what was I saying? Oh yeah, and another thing is just on the Republican side, it seems like if you're really intelligent and competent and know what's going on, that you don't stand a very good chance because Republicans insist on having ideologues. Basically, if you're intelligent, you're not going to match up with the ideological leanings very well because reality just doesn't match the models that we have. So Republicans, it seems to me, are like actively filtering out some of their best people from even getting involved in the politics whatsoever. Right? I think that that's a problem with our systems, but it seems to me that like genocide is like a part of human nature. Have you ever considered joining the crowd? I've never heard of that. Never heard of it. Is that like a thing where I would get on the podcast or something? I kind of do my own thing for the most part. I probably should try and collaborate with people more, but I don't know. That kind of gets me thinking about some of the stuff they were talking about yesterday, which is that, like, as much as I try, it seems like I'm still not in a very good place to really put on the kind of risk that I would like. You know, like I'm still trading one lot micro contracts. I could trade larger than that. But, you know, number one, I just don't feel like my life is completely, you know, I have these kids, okay? And my 3-year-old is severely autistic, doesn't speak yet. The 1-year-old is just getting into his twos. Or, well, he's getting into those, like, that terrible 2 zone. So, like, he's discovered that he can scream really loud. So, like, you'll give him the phone. And then anytime that the phone goes into it, he clicks a button and the phone goes to a screen that he doesn't like, or, you know, he needs you to come and fix it, he screams at the top of his lungs. Oh my gosh. And that's like, you know, it's time for bedtime, screams at the top of his lungs. So pretty much impossible for me to get 8 hours of sleep right now. Just as an example. And even if I'm getting my sleep, and it's also hitting into my workouts. I'm not able to work out as diligently as I would like because I often have to watch the kids. And then it's just a lot of mental energy in general. So, like, I don't think that I feel like, okay, the beginning of the year, we usually do pretty well. We usually have a lot of good moves for us. We also get a lot of good moves in the time period from September to November as well. But I've always struggled in that time period. I think that part of it may be that money does come out of the market for tax selling and things like that. But, we had a lot of really good moves, but I just did not perform very well in October, right? So I feel, though, that part of it may also be that, I'm just not informed enough in this instance, and that's because I have other distractions, perhaps. Could also be harming me. So I was like, well, I would like to put on some more risk, but is now really the time to put on more risk? I don't think so. Because clearly even, just the small things is not completely optimized right now. And then on top of that, I try and keep the money segregated. Like, what I make from the stream, both from the YouTube advertisements and from the affiliate links, I try and put back into the stream, which means buying more equipment. We bought this chair. That's so that we can make content about the chair. But we're going to build a computer so we can make content about the whole server setup and stuff like that, right? And after I've done it, because I feel like that's my obligation to you. You guys support me. I need to be doing everything I can to make the stream as great as possible, right? So I'm much more likely to go and purchase a new subscription so that I can get even better information to share with you guys than I am to trade it, right? But at some point, we have enough, and we've done all those things. We could put it in to trade it, but I try and keep it segregated too. So like I don't put my own, or at least until I've completely drawn down this account, which could be years, right? But I don't want to put thousands of dollars of my own money into it every year to rejuvenate the account and stuff like that. So I want to just stay small until I can build that up. And I have to take like long-term perspective on it, right? Like, yeah, that could be a couple of years, and maybe in 3 years, both of them will be in school or in kindergarten, and then hopefully by that point it will be a little bit less of an ask on me, right? So it's like, there's all of these things that maybe I should be doing and I forget, or I just don't do them, or whatever. Yeah, I should probably be collaborating with other people, but then it's like, yeah, but most people that are out there in the trading space, they don't really want to collaborate with, I'll think somebody would be like great to collaborate with, and then they start talking about all of these TA levels that I know are nonsense. It's just... I think your interest is more in building a channel than actively trading. I don't know about that, because I think that if my interest was primarily in building a channel, I think that I would be doing other things, right? I would be spending more of my focus making videos that I know are likely to trigger the algorithm, rather than focusing on what's going to give us the best trading. Oh, I see. Have you considered joining the crowded podcast community? So making like a weekly podcast? Oh, okay. Yeah, I don't know. That's more work. What would I talk about? Well, I don't know. It could be good. Could be good. Something that I would like to do. I don't feel like that my schedule is very well set up for it right now. But what I would like to do is use Discord and have the Discord stage on Sundays. So the way the stage works is the people that are on the stage, they can talk and everybody can listen, and everybody in the channel can like ask questions or raise their hands. And so I can call on anybody in the audience to get up on stage and talk if they want. Right. And then that way we can have like a discussion with a large number of people, and everybody can have the opportunity to get involved, but it's still structured, right? Because there's a stage and everything. I think it's a really cool idea. And we've messed around with it a little bit, but we've never really fully taken advantage of it. And I feel like if we started doing something on Sunday, that's something we could do, And then that would, I guess, be a podcast. I don't know. One of the things that I see a lot of, though, is, like it's crowded. Yeah. So I was reading this morning, Chamath. he's running a subscription through X, through the platform formerly known as Twitter. And it's like $100 subscription. And it's basically like he's going to go into his deep dive research that he does for his private equity firm. And then there'll be like Q&A sessions and stuff like that. And it's kind of like, but it seems to me like somewhat of a low effort. Oh yeah, people will spend $100 for me to put this together. And he could probably, have ChatGPT write the things for all I know. But unclear to me whether he'd actually be providing me with $100 worth of value that I would actually make me money back, And I'm seeing that all over the place, and I don't want to be on that. I only want to put content out if I'm really positive that it's going to help you. And then it's the same that goes for the stream. I mean, obviously, I do go off on tangents. I do indulge myself a little bit sometimes, and we need to have fun as well. We've been a little bit too serious today. But the things that I talk about, I'm talking about them because I think that they're important in understanding the world, or in how we want to structure our lives to be more effective. Is a lot of why I talk about some of those things. So only talk about things that I think will have value to you. I guess that means that I should be able to come up with enough stuff for value for a podcast. But if I was going to do a podcast, I need to be much more structured about it, right? Couldn't just wing it. By the way, we had Kashkari and Goolsby supposed to be speaking, but I have not heard a whole lot, if anything at all, about them saying stuff. Do I not? How come I can't see TweetDeck anymore? There we go. Well, now coming back to the market, I find that move down and then reversal of a little jarring. That was a little jarring to me. We're still at basically where I got out at, so I'm gonna give myself a B+ on managing the trade. Yeah, I haven't heard anything either, says Dan. This is really odd. I do think that it was the Japanese yen that was the key driver there. Are seeing gold bounce here since the start of the session, so that's interesting. S&P 500 is going to open up here in about 40 seconds. Can you rant about the square root law? Can you show an example with actual numbers? Maybe. Let's see. So what is the square root law? Let me get my pen to work here. Crude oil is like big time down. Okay, pen's being a little bit weird. Okay. What is the square root law? Oh, come on. Come on, don't be like this. Don't be like this, Epic Pen. Sometimes when it gets like this, I think maybe if I can restart it. Financial Juice has a ton of... Yeah, I just haven't been hearing it in my ears. It's like something happens that like... Exit Epic Pen. I guess the thing that's getting to me right now is that I did get pretty strong sign of a strong meta order, and now the market is not acting like that. That's what happened. So it's just market making. I don't know. It's a little bit of an odd morning, or let's say a difficult morning. I wonder if I come in and I change the priority of this process, that could maybe do it. You can go to the detail here and see if I get set its priority to real time, change priority. Does that improve it? Still seems to be pretty iffy. Actually, that's worse. It must be, I wonder if maybe it's just when I'm running the stream. Okay, let me try the other one. The other one doesn't work quite as well, but it'll be smoother. Okay. Also, while I'm doing this, let's just disable the account just to be sure. I don't like the way that it's going right now. Okay. So what is the square root law? The square root law is the change in price is equal to y times omega times the square root of q over v. Should I change that? Hold on. Oh, come on. I'm not using all my CPU. I don't know why everything acts like I am. It's super annoying. Options. No. Maybe this way. Options. There we go. Okay. Hands. Okay. Okay. Change in price is equal to y omega square root q over v, where q is size of order. Okay, and V is volume. And omega is volatility. Volatility. And Y is between 0 and 2. I don't think I've ever seen one higher than 2. Okay. Y is instrument specific. So basically what you do is you execute meta orders and you already know what the volatility, like you go through you execute a meta order one morning, right? And so then you say Q is how many orders how large my order was. V is the total volume during that time. And omega was the volatility during that time, the range of that time essentially. And then I know how much price changed, and I can then calculate for Y, right? And that Y, that scalar, tends to be consistent over time, okay? So, what does this look like when you graph it? When you graph it, you get something like this, where if this is Q, and this is the change in the impact, the change in price, okay? The square root looks like this, okay? Which is to say that you would think that so let's do the math here, okay? So we say Y omega times the square root of, let's say, 0.01 V over V. Okay, so we're going to trade 1% of the volume for the session, right? These V's cancel out. So it's Y omega times the square root of 0.01, which is actually 0.1, right? So 1% of the volume is responsible for 10% of the volatility. That's what the square root law says, okay? But it also says, what if we were 0.02? So we traded double the amount of volume, okay? Then we would get YO times the square root of 0.02, okay? Now the square root of 0.02 is not 0.2, right? Let's come over to our calculator and prove that. Okay, so first of all, square root of 0.01. Oops, the 0.01 square root like that. Yeah, 0.01 square root is 0.1. Okay, 0.02 square root is 0.0141235, right? So the same as the square root of 2, right? So if we come back here, so it's YO 0.1412. Okay. So 2% of the volatility is actually like 14% of the volatility, right? 1% of the volume can result in 10% of the volatility. 2% of the volume can result in 14% of the volatility. It's a square root law, right? And you get this sort of a thing, okay? So what is this model actually kind of saying? Because one of the ways that you can think of it, it looks like we did trade 108 even, by the way. So that's cool. Let's just recenter our DOMs here so we can keep track of that. So what is it really saying? So you can kind of think of different kind of like classes of equations, right? Like there's exponential equations. What is an exponential, right? Is like if my money is rising exponentially, it's because, I take $10 and then I use that $10 to make it $20, and then use that $20 to make it 40, and then use that 40 to make it 80, and it's exponentially increasing, right? And that's what an exponential one looks like, right? A square root law is like it's increasing, but it's as you increase, there's kind of like an upper limit to it, essentially. Like the more that it increases, the harder it gets, essentially. So it's almost like a speed limit in the market. This is basically, the larger you get, that increasing size does less and less for you in terms of your market impact. Otherwise, if it's scaled linearly, then all you would have to do to make money in the market is be really big and move the market around, and your impact would be so much that you would always make money from it. But because there's a square root law, you lose enough from the impact and everything that it's not profitable to move things around like that. And so large players, they want to affect the market as little as possible. Now, they still have a pretty big impact on the market. That's a crazy thing, but they're trying to minimize that, actually. And that's why it's kind of like they're sneaky about it, right? It's like by the time it moves and you realize what's going on, it's usually already too late. They've already executed most of it, right? So what it really means is every order matters, right? Your relative impact per contract is higher than the impact per contract of somebody that's trading much larger size. And so that means that individual orders matter a lot more than we would like to think. And this is kind of a counterintuitive kind of thing, right? So the first thing that I would say is every order matters. Every order matters. Okay. Now, the thing is that these guys are so big. They are so big that it still moves the market. So when we're, trading here, we can anticipate that, if a certain trade is going to come through, it's going to move the market in our direction. And we can anticipate that when they move the market, that they will move it in accordance with the square root law, which is to say that, there's kind of an upper limit on how far it can go on one leg. And they will create this liquidity hole that they can execute into, pull back, and then they'll do it again, right? That constant why puzzles me. So basically what it's saying is, okay, if I trade 1% of the contracts over here in the treasury, do you think it's going to move the treasury as much as if I do 1% of the volume in the NASDAQ? Probably not, right? So there has to be a constant that accounts for the instrument itself. Now, there's this whole thing about what are some things that you could use to calculate Y, right? Like Y is going to be dependent on what the average liquidity is of that instrument, might have something to do with, how elastic the supply and demand are in those markets, things like that, right? But it's specific to that instrument. And what they do is a bank, they will execute a large meta order, right? And then after they execute that large meta order, they have all of these numbers. They know how much volume overall traded during that time period. They know how much of that volume was them. And they know like what the average volatility of that instrument is. And so then they can look at how much they actually did move price to calculate Y. And every time that they do that, they're constantly recalculating Y. And of course, it will be a little tiny bit different. Okay, but it's incredibly consistent. It's like it'll be 0.48 one day and 0.476 the other day, right? But it's a very consistent over time. It could maybe change a little bit over time as like an instrument becomes more liquid or something like that, but it's a remarkably consistent number, right? So if you don't know what Y is, you can just guess, right? You can say it's 1. Let's just assume that Y is 1. You'll still get a pretty good estimate of how much a certain amount of volume will move the market, okay? And so I can come in and I can do something like, I think that this piece of news is going to move the market 50,000 contracts net, let's just say. So let's come and make a little chart here. Because you wanted the actual numbers, right? I've never done this with ZN before, so this could be interesting. Okay, so what I'm going to do is I'm going to add onto here my speculator Seth multi-ATR range in ticks, let's say. And then I'm also going to add a volume. And I'm also going to add an SMA period of let's say 10 on that volume. So come into here, indicators. I've set it up so that that SMA is running on volume instead of on the price, right? Okay. Move that down onto volume down in here. Okay. Okay, so first thing is that I do need some wider numbers. So let's say this SMA is actually like a 50 period SMA. Yeah, that's more like it. Okay. So what it's telling me is on average in a 30-minute period, we're going to move 6 ticks. Let's say 7. And there's going to be 39,000 contracts. Okay. So we're going to say Y. Oops, let's see, use the dark yellow. Y, or sorry. The change in price, P equals Y times 6.7 times the square root of Q over 39.5. 39.5. Okay. Now, we had a move here that moved us 11 ticks and was a net, let's see here, from 55 to 42. So that would be 10, that would be 13. Okay. So we had a move that it moved at 13 ticks equals Y times 6.7 times the square root of 13,000 over 39.5. Right? 13,000 divided by 39.5. Square root of that is 0.573. Okay. Times 6.7, 3.84. Okay, and then it will be, let's see here, how do I save, or how do I do memory? M plus. I'll just copy and paste it like this. Control C. 13 divided by that number. And our y becomes 3.821. Well, because I'm doing it in ticks, my y ends up. I said y should be between 0 and t, right? How did I get that 13k for q? We are trying to calculate based on this little move right here, right? We moved down. We basically, oh sorry, did I say 13 ticks? It should actually be 11 ticks. We moved down 11 ticks and we lost 13k. So it's actually, I come back over here. It's actually 11 divided by that number equals. Okay, so y is 3.8436 blah 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 blah, right? Okay. Y equals 3.844. We give a little about, it was about. Okay. So now that we've calculated that y, what would happen if 50,000 contracts came in and traded, right? Well, that would be a kind of a problem. So it would be too big. So let's do 20,000 contracts. Okay, so now we say y times, 3.844 times 6.7 times the square root of 20k over 39.5k, right? So now we say 20 divided by 39.5 square root times 6.7 times 3.844. And it's telling us that it could move the market 18 ticks, right? So the move that we got that was 13k, it moved the market 11 ticks. And this is my estimate, is that if 20,000 contracts came through, that it would move the market about 18 ticks. Okay. Now, this kind of calculation is going to be more accurate if you're doing it on like a daily basis. So if I said I'm going to execute this money over a day, right? Because then you'd have more volume to work with. And basically, the smaller this number is in here, the more accurate it is. Because there's a certain point at which this becomes a percentage of the volume that's too high, and then the square root law doesn't work anymore. Talking about the square root law. So I was just showing him how to calculate y and then turn around and use it to estimate how big a move would be. Now, I'm not saying that you need to do that kind of a calculation all the time. What I would do is say you have a situation like Elon Musk, right? Elon Musk is going to sell 10% of his position or something like that, right? Then I could come in and calculate that, how much it will move that stock, and use that for price targets and things like that, right? But here as day traders, we just kind of have to keep in mind the general properties of the square root law that we just talked about, which means that every order matters, and there's kind of an upper limit to how much they can move the market. And so once we start to see that square root law behavior come in, and it happens because of the damaged liquidity. So essentially, once we see the market makers start to kind of get a little bit shy, basically a lot of volume is trading in a spot, but they're not putting up a whole lot of liquidity at that particular price. That's where you'll start to see it. That's where it won't go very far. Won't go as far there. The move is probably done. You're going to wait 45 minutes, and then maybe we'll get another move. Right? But again, let me go back. What is the square root law, just to review here for Lucas, because this is the most important part, okay? The square root law is the change in price is equal to y, which is this constant we calculate for every instrument, omega, the volatility, and the square root of the size of the order over v. So, what if Q was 1% of v? Okay? The square root of 0.01 v over v. V's cancel out, and it's the square root of 01. What's the square root of 01? It's 0.1. Okay? What if we had 0.02? The square root of 0.02 v over v. The v's cancel out. You get the square root of 0.02. What is the square root of 0.02? Is it 0.2? The square root of 0.1 is of 0.01 is 0.1, so the square root of 0.02 should be 0.2, right? Wrong. No. It is 0.1413. Blah, 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 blah. You know, square root of 2. It's an irrational number, right? So, double the volume, but the impact is not double. In fact, the impact is less than 1.5. Every order matters. More than you think it does. That's the key thing that you need to understand. That's why trading is so hard. Is because all of our actions have an impact. And the market reacts to those. So don't move size. Well, I mean, that helps. Or at least you need to know how much size the market can handle, essentially, right? So once we understand the square root law, then we get two things, which is one, position sizing, and two, optimal execution. Okay, so position sizing, the first study about position sizing is the Kyle model. I would have to prepare for me to go into the math about the Kyle model. But basically, you can use the Kyle model to estimate how much volume the market could potentially handle at that time. Okay, and then optimal execution is basically a scheduling algorithm that tells you how to split your orders up to receive the best execution based on the liquidity. Right, and basically, when you combine all of those things together, you end up executing like this. You execute a ton. Yeah, you execute into the liquidity hole. You do another leg, create the liquidity hole, and execute. Right? So this is like the price. This is the change in price, and this is how you execute. Right? You're executing the whole time, but you're executing more aggressively here than you are here. And it's actually more like this because you go up like this, right? But then this one, it's more gradual, but because you do it for so long, you end up executing way more in that liquidity hole than you do in this area. Exactly. How much size? It's basically from what... So now we're getting very theoretical, but our best explanation for why this square root law behavior occurs is because of liquidity. So because of lack of liquidity, the market makers basically can't handle it. And so you're basically giving the market maker time. Well, it's not just for the market maker to adjust their positions, but enough time for other market participants to come in and start replacing that liquidity, right? Because you've traded in through here. Everybody that wanted to get filled has traded in here. So if there's going to be more liquidity, it has to be different people. And that's how much time it takes on average for different people to come in. And I'm just telling you, in the treasury market, that the really rough, easy rule of thumb is 45 minutes. You can actually calculate it with the 3/4 law. So the 3/4 law is the same thing. It's like y omega times the q over v to the 3/4. That's how you calculate how far back it will come. And then because of that, you get the I forget how the math comes out. Is it, did I say 2/4? It's actually 3/5 law, isn't it? It's 3/5. It's over to the 3/5, right? And then if you take the reciprocal of that, it's 5/3, and that ends up being 1.5, right? So basically, if this is x in time, then this is going to be 1.5x. Yeah, you're right, Chiwi. It's 3/5. Okay. So, but, you know, we don't need to go into it that deep because we don't have to be that precise because we will just see it as it's happening on the DOM. We just need to be aware that's the way it tends to behave. We should see it in the DOM. And then once we start seeing that behavior in the DOM, then we know, oh, okay, that's the spot where market maker is strained. And they're not willing to put the liquidity up anymore. Probably happening right there at 29.5, right? Lots of volume lots of volume is traded there. They're not putting up a whole lot of liquidity. Okay, is there an indicator that could be created based on this square root law? I wouldn't be an indicator, right? But what you might want to have is you might want to have some sort of a tool that says if X amount of volume comes through, how far would it move it? You could make a tool like that. It wouldn't be an indicator because you still have to have an estimate of how much volume you're expecting. How a liquidity hole behaves, it's not directional. No. Look at it. Look at it on the chart. So this area that we were talking about, you see it right there? Basically, they've been sitting at 29.5, right? Nobody's trading 30, 31.5, right? It's just stuck in a 3-tick range. Some people will hit into 30. Some people will hit into 29, but there's not enough of them to push it outside of that hole. Why is that? Because the liquidity basically looks like this. Right? In order for me to get below 29, I'm going to have to trade some 3,000 to 5,000 contracts. But it's only taking like 500 contracts to move it back and forth across 29.5. And so it just goes... It goes nowhere for 45 minutes. Because look at how long it's been. From here to here, let's say. Right? 7:30 until 8. So it's been 30 minutes already. And it's not directional. We have absolutely no clue, just based on the existence of the liquidity hole, which direction it's going to go. Now, if the volume was different, if this right here, if the cumulative delta instead looked like this, you know, pretty auto-correlated to the upside, then we could guess that if there's going to be another leg, that it will be to the upside and bet that they're going to move up like that, right? I thought that we were going to move down. I thought they were going to have meta orders to the downside. So when I saw this, I went short in the anticipation that that would push a little bit further. There'd be a liquidity hole maybe somewhere down in here and then another leg. But it didn't turn out that way, did it? Seems like either that was a small meta order and they're done, or it was just kind of a blip in the Japanese yen or something like that. But the flow that I was anticipating didn't follow through. And that's kind of how you're using some of those laws and stylized behaviors of markets to make some judgments about how I might want to execute and what the market might do. What do you mean by, okay, so you mean a type of latent volume? This is great. Why are we not all over this? But we are all over this, aren't we? I don't understand. I've made all of these videos to describe these things to you guys, and I have a little strategy work spread or document. You go to speculatorseth.com/strategy.html and you put in your email, and it will email it to you. That basically explains why these laws matter and how you can use them. Yeah, liquidity hole often creates point of control. Yes, 100%. Essentially, if you're really good at identifying when the liquidity hole starts to get formed, you can predict where the point of control is going to go to before it happens. You said square root law indicator might be useful to determine how much volume might come. No. What I said is, okay, let's draw the equation. Memorize this equation, guys. Oops. Wrong pen. Memorize this equation. Change in price equals Y times omega square root Q over V. So we can potentially calculate Y based on past moves. We know what the average volatility is. We know what the total volume tends to be. But we don't know what the meta order is, right? So I need Q. You need Q. Q is the wild card here. If I was executing for a bank, I would know what Q is, right? If I'm executing for a bank, I know what Q is because my client says, I want to buy 50,000 contracts of treasury futures, and you go, okay. And so then you go and you plug it into your thing. And that firm, they have this little spreadsheet they have this little database that tells you what the Y for that instrument is. And then it just plugs them in for you. And it tells you, okay, they want to buy 50,000 contracts. That's going to move price this amount. And so then you calculate it. You say, oh, okay, if it's going to move at 18 ticks, then I need to charge them like 24 ticks or whatever I think is like a fair amount of profit for me, right? So I charged them 24 ticks. It's going to move the market 18 ticks, and that means that I make 6 ticks net on the trade for executing it for them, right? And that's the way that it works. But what I can do is sometimes I can come in and say, well, that piece of news that we had was pretty significant. I think that that's going to result in a net change in cumulative delta of 30,000 contracts over the next 4 hours. So how much is that likely to move the market? And then I might be able to judge, hey, is this move over yet? It's moved this far. Well, my calculation is that it's going to move like 18 ticks. Now, I don't come in and stress over what is that exact P, right? Instead, what is the key variable? Q. Q is the key variable. Q is everything. So I just focus all of my attention on trying to predict Q. That's why you'll hear me say, okay, we just had a piece of news. I think that could be a pretty big one. I think that could be 30 to 60,000 contracts. Or, I'll come in and I'll say like days like on Monday where I remember I said, there's already been a change of 30K contracts in cumulative delta. That's pretty significant. So like something is definitely happening, even though it doesn't really appear like that to us on the charts. And then what do you know? We had like a strong trend yesterday. I didn't take it because I didn't understand why they were trading it, but right. We knew because of Q. So that's why I focus on net change in cumulative delta. And you will find, I think, if you watch it long enough, you will find that you can get pretty good at predicting what the net change in cumulative delta might be after certain kinds of things happen. In the treasury, average move is about 10,000 contracts. And if you get more than 10,000 contracts, then something weird is going on, or, you know, like something's up. It's a piece of news like the market's really moving. I think it can be scalped, sell when price is above point of control, and take profit when it reaches point of control. So maybe. So if we were in an instrument where that liquidity hole was multiple prices, then you can kind of do that, yes. In the treasury, in the 10-year treasury, where this behavior is the most clear, okay, like seriously, look at a chart, man. Because the 10-year treasury does this. Oh, it does this. There's one. There's one. There's one. To just spend all of this time at an area, and then inexplicably, for almost no seeming reason at all, it'll just move away from that area. And then sometimes, in this instance, it came back to the hole because this was market making shenanigans. Probably in this one, that might be the case as well. If there isn't actually a large meta order coming in to buy this out, then I think that they will probably visit this price again. Okay, but in the 10-year here, it's really hard to get filled on the bid at 29 and filled on the offer at 30. So you're sitting there waiting a really long time in the queue for like one tick. Tends not to work very well. But in more volatile markets where the liquidity hole is more like 4 to 6 ticks, then you could potentially try and make 1 or 2 ticks in that range as it goes back and forth across it. Just got to realize, though, that at some point it's going to move away from that. And if a large meta order comes in and you're the wrong way, you could lose everything that you made within that zone. Right? And this is why your position in the queue matters, right? If we were in algo, if we were the fastest and we had the best spot in the queue, basically, I tell it every time that it ticks up or it ticks down, I want to add liquidity on at that spot and then pull the liquidity back out if I'm about to be executed, so that I always have a good spot in the queue. And then when we get into this area, I'll be one of those contracts that actually gets filled because I was at the front of the queue, right? So if I'm an algorithm, then you can do that. That's why your spot in the queue matters. How about you observe a liquidity hole and trade ZB? Well, let's see here. I think that it could work, but the issue you're going to run into with that is the spreads, right? Is that you're going to get these situations where you're within that range, but the ZB still kind of falls because we're steepening or whatever the deal is. Okay. Can you discuss your bid-ask settings refresh rate and why you chose that rate? You're just talking about on the DOM in my Jigsaw settings? If I can get the settings to come up here. I'll get this thing where like my GUI could just get slow. It's something I'm running doesn't. So I am basically using the default settings for most of these things, right? I think the key one is like the update interval prints. Basically, when price actually changes, you really want to see it. But I have update interval set to 10 to 100. So 100 milliseconds. So when I worked for the bank and we had risk control systems, we had to calculate those positions 10 times a second. So every 100 milliseconds. That was the budget that we had to work with, right? And so that's what I do. Essentially, if I set it to a much lower value, if I set my update interval to like 7, I think. Now you're going to see a lot more changes. So you're going to see things happen a little bit less chunky. I think that you also have to come in and change this other setting though, right? You have to change come on. Oh, there it is. Options. Market depth throttle. I have set to 50, but you could maybe set that to 7, right? And then you would see a lot more changes. Like when it moves up, you would see it shift. You know, you'd see a lot of little changes as it goes. Basically, as all of the contracts get canceled. Okay, but that's more processor usage. That's more processor usage. And I will run into situations where when it's a really tough market that I feel like things aren't responsive enough and everything, so I limit all of those things. So that's why I set it to 100, which is basically like 50 to 100 is about the highest I would put it. Right? It's about the highest that I would put it. But another thing that you could do is you could say, I want to set it equal to the refresh rate of my monitor. So if you have a, 144 hertz monitor divided by 1,000, right? It basically comes out to 7 milliseconds a frame. And so then you could set that number to 7, and you would have things synced up pretty much where each frame there could potentially be a level 2 change. Of course, this also depends largely on who your broker is and all that. Okay, why haven't I heard more about this square root law? Because you don't work for a bank. And retail traders, I apparently, this kind of information is a little bit too complicated. So it's like, it's hard math. Well, it's not hard math, but it's real math, right? How many people, I tell you, go out on the street and ask people, what is the square root of 0.02? Tell them the square root of 0.01 is 0.1. What is the square root of 0.02? And see how many people get it right. Most people don't know that. Most people, they were taught it in school and they forget it, right? So it's math, and people dismiss it because it's math. And then retail traders don't really understand why it's relevant to them, right? So you guys are asking me, I think that means that I did a good job of explaining why it's relevant to us as traders, right? I did that. Not to toot my own horn, but nobody's ever said that. Why would this be relevant to retail traders? Everybody just assumed this is a model that's only relevant to block traders at banks and retail traders. There's no value in them understanding those things. I took it and I was able to apply it to why is it relevant to retail traders. So that's my contribution, right? So that's why you haven't heard of it, because apparently I'm the first retail trader that's on YouTube telling people why this is actually relevant to them. Over time, 10, 20 years from now, I think you probably will see more people that understand this. But if you worked for a bank, or if you were, in school for quantitative finance and you were doing like market making stuff, then they would teach you these things. So the quant professional community, they understand this stuff very, very well, and the retail traders are completely ignorant of it. Right? Retail traders are spending all of their time looking at moving averages and price action setups that they never learned this stuff. It's curious, but I mean, it's good for us that very few people understand this, right? A calculator does that, yes, but the whole thing is that most people will think it's linear, right? Most people will tell you that the square root of 0.02 is 0.2, and it's not. It's 0.1413286. Something like that, right? Square root of 2. I'm maybe the square root of 2 should be my favorite number. How about that? We can memorize the square root of 2, or how to approximate it, and I can just spend all of my time approximating the square root of 2 in my head. That sounds fun. That sounds like a Seth thing. make a t-shirt. The square root of 2 equals 141. Actually, I really like that. That would be an easy t-shirt. Get the square root of 0.1 equals 0.01 equals 0.1. The square root of 0.02 equals 141. And it just keeps going. Yes, should do that. I'll do that today. We'll have it tomorrow. Yeah. Anyways. But again, they don't teach it to retail traders because people don't believe that it's relevant to them. And you know, you gotta understand, like, real talk now, okay? Retail trading is essentially a cargo cult, right? You know what a cargo cult is? So there are all of these islands in the Pacific where the U.S. military had bases and military bases during World War II. And so they were doing all of these things, talking to people on the radio, and they'd have people out on the runway, bringing the planes, you know, directing the planes and doing all of this stuff. And then there was the indigenous people, and they maybe worked with the indigenous people, but, you know, the indigenous people, they're basic. You know, they don't have any kind of education or anything like that. And so they didn't know any of what was going on at all. And so after the U.S. military left, the indigenous people took up and started doing the things that they saw the military do. So they would get together and they will march, and they will have people that pretend to talk on a radio. And since they don't have real planes and stuff, they just make all of this stuff out of straw, right? They're trying to approximate, to the best of their ability, what they saw the U.S. military do. And some of them actually understand this, that like, oh, it doesn't, you know, obviously I don't think that an airplane is going to come, but, you know, it gives us structure, and it's good for the young men, and it's like a beneficial thing. And so they continue to believe and just do it full-heartedly. And apparently, every once in a while, the United States will drop a cargo shipment, and it keeps these cargo cults going, right? Retail trading is the exact same thing. We've seen professionals at the banks and the hedge funds and everything make money, and so we're trying to approximate that. And we've seen people being floor traders in the 70s, 80s, 90s, and early 2000s, and we're trying to approximate that. And so we might even be taking some of the stuff that those guys use to become profitable, but because we don't fully understand the market, all of the quant stuff that I'm trying to teach you, it's basically a cargo cult. And some of those things might have worked at some point, but they don't work anymore. The edge of those have been taken out of the market. So what do we have to do in order to find an edge? Well, first, we have to quantify the things that we can actually prove are true. So like the square root law is one of, if not the most solid empirical finding of markets. It's a stylized behavior that exists across almost every data set that you can see. If you have the ability to look at a large player and identify that this large player was responsible for all of these orders, you can then calculate the impact that they had on the market. And it will follow a square root law. And this is a finding that is consistent across every data set. Okay. Now that we understand all of those things and where the actual statistical aberrations in the market are and how they found those statistical aberrations, right? Now we have a chance that maybe we might be able to discover some on our own. Because we're not doing a cargo cult anymore. We're actually doing the real science that led these traders to the trades that made them famous. My favorite law is auto. Well, yeah, that one's probably the most useful to us, right? Does autocorrelation always precede the square root law? Well, no, because, you know, what I'm looking for, the easy trade that I'm looking for is there's a persistent imbalance between buyers and sellers that basically ends up persisting all day. These guys, they have big orders, they need to get filled. It's going to take them all day to do it. And so you will continue to see cumulative delta creep up in one direction all the way until the pit close. Okay? But that's not what's happening all the time. There can be the Bank of Japan out here selling treasuries because they need to fund currency intervention later. And in the meantime, a hedge fund is coming in and buying treasuries because they think that the interest rate that they're getting is really good and that we're at peak rates. And so, yeah, both of those large meta orders are having impact, but they're clashing into each other, right? So price goes in a range and does all this sort of stuff. And it's hard for us to sort out what's going on because there could be like 6 large meta orders going on. And since they're not all in the same direction and they're not all executing the same way, we might not be able to differentiate or decipher them. Okay. But the autocorrelation is very important, which is to say, I think everybody knows that markets tend to have some autocorrelation, okay? We always say it as like the trend is your friend. If it's going up, it's likely to continue going up. What it actually is if you see a buy order, you're more likely to see another buy order an hour from then. Like 0.5% more likely to see another buy order if you just, with any random order picked, which seems like a really small margin, but it's actually quite large statistically. Okay. And the key piece of information that we have there is, why does that happen? Because retail traders believe that it's because I go and I see that the trend is up, and so I decide to buy as well. Essentially, they're projecting on the market. That's the way that I trade, so everybody must be trading that way. And so quants went in and tried to model this using propagator models, like the same kind of model that you would use to try and describe nuclear fission, right? Where, you know, an atom explodes and neutrons go off, and then how likely are those neutrons to hit into other pieces of uranium and those go off as well? And, you know, how does that eventually move into it reaching critical mass? They tried using those kinds of models, and those models could not explain all of the behaviors that we see in the markets, like the square root law, the autocorrelation of order signs, etc., etc., etc. Basically, they said if that's what it was, the market would behave very, very differently. So they went back and they came up with a different theory. They said maybe it's just because there are really large meta orders and it takes them a long time to trade. And so the reason you see that consistent trend is because that's how long it takes for this guy to buy all of the contracts that he needs. And when they did that, then they found that it perfectly recreated all of the stylized behaviors of markets that they were studying. And that's why our best explanation right now is for the autocorrelation of order signs is the existence of large meta orders. Right. Once they figured that out, then they started, investigating these meta orders, and what do you know? We found this square root law. And now all of a sudden, all of the things about why trading is so hard and everything makes sense. Then we get into the order flow view of markets and all of the conundrums about markets. Like, why is it that sometimes we move even though there's no news? Why is it that, it never seems to move as much as I think it should based on the news? I think this is a really important move at news and it didn't hardly move at all. And then I think this is really insignificant and it moved a ton. Well, it's because it's the orders that drive it. That doesn't necessarily correlate to how significant the news was. What isn't this? I don't know what you're talking about with that. To be honest, I don't understand the Markov chains very well, but probably would if I programmed it before. I seem to understand it in theory, but okay. How do you manage your stop loss and take profit? Okay. Ugh. This is a subject that I hate. Okay. So if you go and you make an algorithm, okay. Let's just say that it's some random technical thing that we seem to think does something. When I see this order flow signal, I go long. Okay, how do I manage the trade once I get into it? When do I take my profit? When do I exit? Etc. 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 Okay, so I go and I test a bunch of different methods of doing this algorithmically. right? I've written it algorithmically. I can test it. I can say, what if I use a set, stop, and target, right? And all of my research suggests that using a set, stop, and target increases the amount of randomness in your returns, which is to say that it makes it even more likely that that algorithm will converge on break even, essentially. Okay. So what would work better? Okay, well, another way of doing it would be stop and reverse. Okay, so let's say that I have an algorithm that just goes long when we cross above the 10-minute moving average on the S&P 500, for instance. Okay, so I'm saying when you do that one and then you give it 10 ticks on each side and, 10 ticks profit and 10 ticks stop loss, basically that's going to be random. But what you could do instead is you could say you stay in it until we cross back below that moving average. Okay, that stop and reverse is what we would call that. Okay, so you're introducing a signal for your exit and a signal for your entry. That will almost always improve the total profit that your system gets. But will also probably increase your max loss and your drawdowns. That's like, so it's all kind of still random. Like, we don't actually have an edge in our entry, apparently. But, it's all with the statistics. If I use stop and reverse, I'm more likely to make more money because I'm taking on more risk, essentially. Right? So this is the dirty secret about risk management, is that all of the things that people tell you about risk management actually make it less likely to make money. Right? What makes you more likely to make money? Taking on more risk. Probably I would do better if I took on more risk, right? But it's where the edge kind of comes in, is knowing when to take those risks, right? Knowing that it's okay to have a really big stop because it's just very likely for it to go in your direction or whatever the deal is, or knowing that in this instance it should just be going and getting out right now. Okay, so this is why I no longer really use like set stops and targets, right? My target is based on cumulative delta. I have a certain amount of cumulative delta that I want to see before I get out, and it's based on when I start to see the square root law come in. So it just, maybe I only made 1 or 2 ticks on it. I get into it, I immediately start to see that liquidity difficulty and that liquidity hole start to form, I get out. Right? And conversely, my stop is if I'm not seeing the autocorrelated volume that I should, right? I expect that we're going to have a meta like today. Okay, so today we started to see a sell, so I got in on the expectation that meta order would be larger, and it didn't, and it started to come back. So I lost 5 ticks on it. Might have been able to get a little bit less than that. But basically, because I started to see the volume going the wrong direction, that's not what I should be seeing. I got out. So I don't have a set target or a stop. I have conditions that I use to exit. Does that make sense? And yes, that does mean that on average, I take more risk than if I had set targets. But that's kind of necessary to really make money from day trading. You need to have an actual edge, because the issue is if it's just random and it's just the large stop and the tiny target that is making you money, then eventually you'll run into the fat tail. And then if you keep trading through that fat tail, it'll probably blow your account. Versus what we're doing, where there's an actual edge and we're looking for something and we're only trading when that happens. Then if that fat tail comes, then we're just not going to trade that fat tail and we avoid them. Or at least we limit our losses on the fat tails. Okay, what if one day an algo works, but the next day it doesn't? What changed? Well, I mean, I don't know if you could really make too many conclusions about one day versus another day, but let's say that we had an algorithm that works for 5 years. I always say, like, my statistical level where I want to see the amount of performance before I say, like, this works. Okay, 5 years. Works 5 years. And you've traded it live for 5 years and it works. And then all of a sudden, 1 quarter, it doesn't work. Well, okay, historically, is that amount of drawdown normal? Let's say that it's not. Let's say that it was 5 years and you never had a losing quarter. And now you've had a losing quarter. Well, that could mean that something in the market changed. So maybe a rule changed. Maybe something about the market itself has changed and that behavior is not happening anymore. Doesn't happen very often, but it can happen. Maybe there was a change in the participants or a change in the macroeconomics. Like, you know, you were in a cycle where you could always buy the treasuries because monetary policy was easy. And now all of a sudden, we're not in a quantitative easing environment. We're in a quantitative tightening environment. And that's something that we hadn't seen in well over, you know, way further back than 5 years. It's been like 13 years. And that's what changed. And that's why it's not working. Well, if we know why this strategy works, that is to say, we didn't just like test a bunch of statistical things and find something and hope that it continues to perform. But we actually had like a theory about the way that the market behaves and why it does that, and then found a profitable strategy based on it. Then we should be able to judge why it's changed based on, you know, what we know about the market relevant to that particular issue, right? So that's one of the big advantages is like if I understand why my technical strategy works, then I may be better equipped to understand when I should stop trading it. Right. Well, it could be that the market is in constant state of flux and no one algo is going to solve it. Well, so this other side is that, again, like every order matters because of the square root law, right? And that means that it's very, very easy for the market to remove statistical inefficiencies from the market. So yes, if you have some sort of statistical aberration out there, the chances of finding something that works over a 5-year period like that on intraday trading is extremely, extremely low. And if you do find something like that, there's always that possibility that other people in the market are going to find it, and eventually, if enough orders are trading on that, then it will stop working, right? So the market seeks out and destroys statistical inefficiencies. But I guess the split side to that is that every successful algo trader that I've ever seen talks about that you have to combine things together. That the amount of edge that you can get from any one individual thing is quite small, and it's when you combine a couple hundred of those together with a machine learning model that you get something that's really powerful. That's why I explore autocorrelation in the square root law, because those are constant on every market all the time. Well, every market that uses a limit order book. But yes, because the edges that are created by market microstructure should be consistent. You might not be able to profit from it. Somebody might beat you to it, but the inefficiency will always be there. This liquidity hole thing is a great example. Somebody is making money from the liquidity holes, right? There are market makers that they have a good spot in line and they make money from those, from market making those areas. But we are not fast enough to take advantage of that one, right? These ones that I'm telling you about, all of these statistical behaviors that I'm telling you about, somebody out there is making money from. We're probably not competitive enough to make money from them, but it's a foundation, it's a base that we can kind of use to try and find other behaviors that other people don't know about, or to use them as kind of support behind the speculations that we're going to make. Because ultimately what I do is I speculate, right? I speculate and I say, I need to be careful about reversals here today because the Bank of Japan might come in and intervene. I don't know that for sure. I'm just speculating that the Bank of Japan might come in. And if I'm informed enough, my speculations can work out. And then I'm using all of these behaviors to kind of optimize my entries and to help me understand when my speculation is right and when it's wrong and all that sort of stuff, right? The pen working pretty well here with this G ink has got me like I want to come in and write. Yep. I would say that when this stream started that I was really more scalper Seth, but I moved as time went on. I've become more and more speculator. Yep. S&P 500 is taking a pretty good run here, almost to 4,400. Oh, what do we got overall? Let's see here. Soybeans biggest winner today at 1.19%, followed by UB at 1.16. Biggest losers, natural gas down 3.82%, followed by oil down 3.29%. Silver also down 2.44%. That's a pretty big drop for silver and gold. Copper down. So basically the metals and energy getting hurt the most today, which is kind of interesting. I don't think that that's suggesting that like the market is getting weaker, or that they think, well, maybe they think demand is going to soften. I don't know. But I don't think that the overall market is expecting a recession per se. The S&P 500 seems to be going pretty good here. I bet that they probably give a lot of it back at some point. That's kind of been the tendency overall, is that there's a lot of mean reversion in the S&P 500, probably because of all of the 0 day to expiration options, huh? It is TPOs, and my thoughts are if price keeps revisiting a certain price level throughout the day, it's probable it will go back there. So I would say that if it's been more than 45 minutes, I don't really care about a price that a lot had traded at before. Unless I think that there's some sort of more fundamental reason why it spent a lot of time there, right? Like, just as an example, 108 even. Okay, there's going to be a lot of options and so forth there. So if we move away from it and we move up, and then that move kind of sputters out, yeah, there's a really good chance that we come back to 108 even, just because there's all of these options and there's like an actual reason for it to come back there, right? But I think that what a lot of people will do is they'll say like, it's going to go back to the point of control or something like that. And well, if you go and do the statistics, I think you'll find that point of control is very likely to get touched, but that's no more likely for it to be touched than what you could sort out by just volatility, right? And volatility clustering. Like if it moved this much yesterday, it's likely to be able to move just as much today, and ergo those same prices will get touched. So be very careful about assigning significance to price levels that don't actually exist. Cool. Tiger's there with us this morning. I was asking about those laws because they built a strategy based on Friday. It made 57. Average win was 4 points. Average loser was 3. Oh, wow, really? Well, that must mean it took a lot of trades. But did you actually, like, backtest that on a real algorithmically tested it? Or... Because one of my really big pet peeves right now is people doing quote-unquote backtesting by hand, right? Backtest should be reproducible, which is to say that you could have two completely different people, and you give them the same rules, they will always come to the same result with the same data. Oh, you demonstrated it. And you executed it, or was an algorithm executing it? You executed it. Wow. I'm not going to say, I mean, I'd say that's a good job, but there's certainly, we would still want to have the same cautions, right? So just 1 day's worth of data. If you're taking a lot of trades, you know, there could be fat tails in there. More high frequency something is, generally speaking, the more I've found that a fat tail will kill you, right? I'm not 100% sure why that is, but... Well, the treasuries are extending a little bit more aggressively there now, so it seems like basically ever since that move that got me to go short, it's been nothing but long ever since that. So... I sure am happy that I bailed on that trade. I guess I should have reversed and I could be short from 605 and be up a good $30 or something. But I don't know. Is this move significant? I don't know. So let me tell you something. The Japanese yen is still acting pretty wild. Look at that. I mean, they did reverse up, but now they're coming back down to it. I don't know what... That's kind of weird. Something's definitely going on. Don't know who the buyers are, though. So once again, I'm just in this market not informed enough. There's too many of these really strong trends that I'm just not anticipating or aware of at all. The amount of signal that I'm getting out of the noise is just too low, right? Well, we did have, like, Fed's Waller is saying some things. Maybe it's because the Federal Reserve speakers were somewhat dovish, or at least that the market is interpreting them as dovish. I haven't heard too much in my news squawk about them, so I didn't see any significant comments that made me go like, they're gonna buy. But Korean stocks crash day after political short selling ban. Yeah, what was with that? So the Korean exchanges, they banned short selling basically because there's like an election coming up or something like that. They did it for political reasons, which is kind of shady, right? And it doesn't seem to be working very well for them. The market is upset that they've banned short selling and are selling essentially because of that. I don't know what you mean by metaphysical in nature. Questions the nature of the mind. I don't know. I mean, if the suggestion is that a technical edge is impossible to find, we know that that's not true, right? Because we know that guys like Renaissance Capital, for instance, have found very consistent edges in the markets. So, but what I do say is that most of what you're taught as retail traders has no efficacy. That science cannot explain it. Well, I don't think that that's true. I mean, I think that there's a lot of really good science about markets. That's the thing. Some really solid data science in markets that is, I find just so fascinating. I love to talk about it. I think I would say that I love the study of the markets more than the trading of the markets. That's definitely true. Kind of going after this now. I guess it was only like 5 ticks, but I feel a little bit bummed out that the didn't really work out for me today and that we missed a trend up. I think I could have maybe traded it to 108 again, but this little bit of more that we've had, there's no way I would have seen that coming. Doesn't sound like Asher ended up going to school. But it is time for me to get going about, and then well, we got 5 minutes, but probably going to be a rough day. We've been investigating some stuff at week and been in conference calls all day. By now, you would expect one big hedge firm with all the cash, and the retail doesn't have enough money to... Well, I mean, it's not all just about who has the most money, but it's, you know, the amount of edge that is available for us to take advantage of is limited because of competition, and we're not very competitive against the hedge funds. That's absolutely true. I'm definitely not a person coming in here and telling you you're going to become a millionaire from trading, right? Like yesterday, somebody was coming in and we were having this discussion because I was saying, well, you know, I'm only trading one micro contract. If I do well in a month, I might make 50 to $100, right? I'm trading super small here. It's really more of a hobby to me. And that's partly because I realize the limited nature of our edge. Now, someday, maybe I discover an edge that is really just so amazing that I do become a millionaire. Or maybe a change happens in the market and I'm positioned in a way to be able to take advantage of it, right? That's the sort of thing. And so got to take the long view of it and just continue to be vigilant and hope that our opportunity comes, right? But we're not very competitive. Probably not. So I will only build a NinjaTrader 8 indicator if it's something particularly complicated, right? Something incredibly sophisticated. Because the issue with an indicator is that you're going to want to change it, right? You'll have a theory. Maybe if I do this, that might show me something about the market, right? And so then you're going to go and you're going to take it, and then you're going to want to change it, right? Based on what you've seen after you've used it for a while. And for me as the developer, that kind of puts us in an awkward situation, because then you're like, well, can you just make this one change? And then I'm like, yes, if you pay me more. And so then you're constantly having to pay more and more to make more and more changes to the algorithm, right? When if it's something that's really just like a simple calculation and whatnot, you would be better served by learning how to program it yourself. And then when you get stuck, just coming and asking me for help to help you debug it, right? So I'll only make an indicator like that if you know exactly what you want. So you have it like all written down, exactly what it's going to do, and that it's not something simple, like that it requires extra graphics drawing or some sort of a sophisticated algorithm that, you know, the average person wouldn't be able to figure out on their own. And then I'm maybe willing to do. I've done it only a handful of times. And the reason that they came to me was because what they wanted drawn was really complicated. You know, like they wanted something that was like a heat map sort of a thing or something like that. And then what I do is I estimate how many hours I think it will take me, and I charge you based on that hourly estimate. And we have a contract that basically specifies exactly what will be delivered and what your rights are and all that sort of stuff. So, like, if there's a bug in it, you can still come back to me and I'll fix it without you having to pay more, for instance. But there's like a limitation on how much you can do that. Well, we come back to 108 even. I don't know if that's significant or not. Things, the treasuries still look tilted to the upside. So I think that my take on today is treasuries rates fall amid slew of Fed speakers. That's what I'm gonna blame it on. All right, so I should be proud. It sucks that I didn't make money today, but I think that I executed that correct. I was wrong, and I got out very early, and the exit was actually pretty darn good. So I should be proud with that. All right. Well, I gotta get going, but I will see you guys tomorrow. And in the meantime, stay excellent, team.